Okay, let's look at what happened this morning on the European session.
Okay, well, a couple of sound bites and headlines from Asia before the European markets open. So China factory production and urban fixed asset investment data came out. So in fact, I think the urban fixed asset data came out over the weekend, but nonetheless, both numbers were disappointing and below their respective forecasts. And if we want a little bit more gloom and doom from Asia, then we had the Japanese industrial production figures for July, and they fell more than expected as well. So a slightly sour note coming out of Asia. And then Goldman Sachs made a comment as well to say that they felt that dollar yen could move back to 130 over the next 12 months and that they expect more QE from the Bank of Japan. So that was the sort of tone from Asia for the early part of the session. But we actually did have some positive numbers from Europe, and once again there's been a surprise to the upside. Eurozone industrial production for July, we look firstly at the month-on-month number, came in at plus 0.6%. That's almost 3 times as high as the forecast, or in fact 3 times as high exactly as the forecast of plus 0.2%. And obviously, though, here below the prior 1.2% read. But if we looked at the year-on-year number, I had to check I was reading this correctly. Year-on-year, industrial production was up in the Eurozone by 1.9% versus the forecast of plus 0.6% and the prior read of plus 1.5%. So despite the mixed data and Mario Draghi's concerns, there are actually some rather positive data points now starting to emerge. Of course, what we haven't got is consistency and uniformity, which would be the most important things. But nonetheless, that's positive, and as we'll see later, it's been well received by the euro.